Hey, good morning. Let's go over today's trade plan. So in the overnight session, the buy side has been dominant, and we know that over the last several days, the buyers have been more active as well. But at the same time, the market is set to open at the 97 quarter to 99 quarter initial resistance zone, and we know that in order to get a sustained breakout beyond that zone, we are going to have to see broad market strength and sustained and decent upside momentum. So we want to see the tick holding above zero and printing at least around 6 to 700 on the upside, and then we want to see the AD in positive territory and then trending higher. As long as those conditions are met, the stage is already set for an upside continuation move, and then we can give edge to the buy side. On the other hand, if we see a strong rejection at initial resistance, then we need to be a little more conservative on the long side because the market could just come right back down into the 91 to 93 initial support and potentially even test a bit lower into yesterday's low of 89.75. So at the 91 to 93 initial support, we need to assess the market in real time and determine whether there is still potential for a move back up towards 97 quarter to 99 quarter and a breakout above that area. If we are seeing excess weakness, then there may not be sufficient upside to justify going long even at 91 to 93. So on the long side today, if it's going to work, it's probably going to be at a more aggressive price because the market is setting up for an upside continuation move. And if the market fails and comes all the way back down into initial support, then you really have to question the strength of the market and whether it's still worthwhile to go long. So even though we have initial support at 91 to 93, we do have to exercise caution there because if the market is strong, it should not retrace all the way back down into 91.93. And then below 91.93, we have yesterday's low at 89.75, followed by a naked VPOC at 87.5. Those are not really very strong levels, but they are something to be aware of. And the next important area of support is at 83.5 to 85.5. That's still a spot where responsive buyers can be active, followed by 75.5 to 78. Again, a very good area for responsive buyers to step in. And then that zone would also mark a range extreme. On the upside, above 97 quarter to 99 quarter, we don't really have any hard resistance. We just have the Globex high from Sunday night session at 24.0375, not really a major level. And given the recent ranges, 24.06 to 24.08 marks the area where the market would be hitting its average range potential, and then 24.13 to 24.15 marks the range extreme. So beyond initial resistance, just keep in mind that the zones that we have are not hard areas of resistance since the market would be printing fresh all-time highs, and they are based on range analysis. So they're better served as upside targets rather than areas where you'd want to step in and fade the market. So beyond initial resistance, you really want to be cautious on the short side because a breakout above initial resistance is a confirmation that the buyers are in control. So again, the main idea heading into today is that the market is setting up for an upside continuation move, but we need to see broad market strength and sustain upside momentum for the move to take place. And if we are going to break out higher, then the market's probably going to hold some of these higher prices. And if we fail and come all the way back down to 91.93, then we really have to assess the situation in real time and determine whether it is still worthwhile to go long at initial support. And if we're seeing excess weakness, then the market could even be heading down towards yesterday's low, the 87.5 naked VPOC, and even the 83.5 to 85.5 zone would be very much within range. So those are the main thoughts. Let's see if the buy side can maintain the control that we've seen in the overnight session, and we'll take it from there.